Hello, everyone. It's time for another federal tax update podcast. It's Roger and Annie. And Annie, how you doing today?
I'm doing pretty good. We're into a good part of the summer, so I'm feeling the heat here in Texas, but otherwise, things are moving along.
Yeah, we're kind of in what I guess is usually the quiet time of summer, and kids are out of school, and things are supposed to be quiet and calm, but nothing's ever completely quiet and calm in the tax world. And we're going to talk a little bit about that. We've had a couple of, hopefully, you've listened to our last couple of episodes where we've had some great guests, and
hmm
um, now you got me and Annie again, just
We're back,
flying together.
just us.
Yeah, just us. But there's some stuff we're going to talk about that's kind of current events going on at the IRS, tax bills, things such as that. We're also going to do an episode, we think, right after we know what this bill finally looks like with our
Right.
DC representative. But as you'll learn from our podcast today, we never really know what's going to happen and when it's going to happen and what it's going to look like. But that's so today is kind of just where do we stand today? What do we think is going to happen? What to look out for? What to be aware of? So it's going to be more of a current events that I think fits into the slow summer time.
Yes, and of course, current events is only current as of today, like you said. Something could change tomorrow, so you never know what's going to happen.
And in many cases, it will change tomorrow. So I guess the big news that is out there right now is this whole idea of this one beautiful bill, and where does it stand? What does it look like? What might it look like? When will something happen? What are the sticking points? So, Annie,
Yeah.
where do you want to start?
Well, we can start there. I mean, the Republicans are still pushing forward with the one big beautiful bill. The Democrats are expressing, concern, giving their opinions. It's probably unlikely that it's going to pass exactly the way it came out of the House. There's very much concern about this will increase the deficit, and some of the provisions unfairly benefit the wealthy. So, I mean, I guess we the Republicans still want to get this done by July 4th. That's, coming up pretty quickly here. So it does require, in order to pass, it does require 51 votes, and there are 53 Republicans in the Senate. So could it? Yes. Will it in its original format or state? Unlikely, but I don't know, Roger. So interesting. You were trying to explain to me how they score these bills.
Yeah, yeah. There's so many things about this, but you hear a lot of, and it's because of what side of the aisle you're on. You hear arguments: is this going to increase the deficit, reduce the deficit? How much does it cost? How much doesn't it cost? And it can be terribly confusing because you have two people looking at the same bill telling us exact opposite
hmm
results. So I thought it might be helpful for those of you that don't really know what they're talking about to go over a couple of things to consider. First of all, cuts in Washington are different than cuts anywhere else. Annie, you and I think if I want to cut my spending, that means if I was spending $10, now I have to spend 9 or less to call it a cut.
hmm
In the world of politics in Washington, a cut can be I spent $10 last year. I expected to spend 15 next year. So if I only spend 13, that's a cut
It
because
qualifies.
it's $3 more than last year, but it's $2 less than I thought. So sometimes you have to be careful when people are talking about cuts. Are they really talking about cuts, or are they talking about a decrease in spending? So
hmm
that's one of the terms that you need to make sure you understand when you hear these things. You'll also hear something about what they call dynamic scoring. So here's something you probably have heard if you paid any attention to this on the news. A big part of this bill is keeping the current tax law in place. In other words, the TCGA is set to
Correct.
expire at the end of December. So, in theory, if nothing happens, taxes go up.
Because 'Cause it'll
Which,
expire if nothing
if
happens.
nothing happens, it will go
Right.
up and taxes will go up. So, in the world of Washington, if they don't go up, that is spending because we're cutting, or that's a reduction in revenue. We're going down from what could happen, not no one really expects this not to be extended unless we just have a complete meltdown, which is possible. So, how do you score a bill when doing nothing causes tax to go up, even if no one believes they'll ever go up? But that's where you see some differences in how this bill is scored in terms of what its spending is. Because in the Democrats' mind, that difference between what the law is and what it could be is additional spending that has to be paid for. Where in the Republicans' mind, how do you do that when nothing has changed? So
Changed.
there's just a lot of politics and back and forth and words. And, um, you hear a lot about spending on Medicare. Uh, this is going to kick people off of Medicare. Well, they can both be right. The bill doesn't do anything to cut down on the benefits directly paid to people on Medicare. It does put some requirements as to how people are eligible and how their eligibility changes. So, for example, it puts a work requirement in.
Hmm.
So, if you're healthy and not working, you would not be able to sign up for Medicare. Okay. Is that a cut in Medicare? Is that waste, fraud, and abuse, whatever it is? So I think the message of all, and it can fall. I mean, you can make an argument for both of them. I'm not saying
I
either
was just
one's
about
right
to
and
say
wrong.
they're probably both right in their own methodology of
Sure.
it of expressing it. It's just really hard for like the even me, and I'm very familiar with some of this stuff. It is difficult to understand. Well, who's right? Who's wrong? Who's making stuff up? Who's telling the truth? Like, how are we supposed to know?
Yeah.
So I think it's very confusing to the taxpayers.
Oh, sure.
Um,
Sure. And you're going to fall in the camp that you tend to, you know,
right, of course.
fall in most kinds. But you make a great point. No one's right or wrong. It's
Right.
the different perspective that we look at something and how we define it. So I think as people who maybe are being asked for advice from clients,
Hmm.
we have to try to stay in the middle lane and not get into the rhetoric around it and kind of deal with the facts of what's being discussed. I'm not smart enough to know the impact on deficits and what our borrowing limit needs to be, and we'll talk a little bit about IRS and how many employees they need or what their budgets need to be. So I think we're all better off if we stay to things that are factual
Hmm.
and let the client, if they want to draw an opinion as to whether it's good or bad policy, let them draw their own conclusion.
That makes
Because
sense.
in this country today, if you pick a side, you're going to be wrong half the time. So, you know,
That's true. And there are quite a few things. I mean, I think both the Republicans and the Democrats want to see some of the TCJA remain permanent. I mean,
sure,
there's definitely there it's not that they're arguing on every single item. There are some you know, they're both in it to win it, but there are also some understanding of they both want this or this is good for everybody or this is good for the environment or whatever they're having. It's the specifics that go beyond it. For example, like the state and local tax deduction.
right,
You
right.
know, they both think it's good or they both are for it, but the dollar amount is where they're arguing about, or
Yeah.
the specifics of how that is
I
handled.
actually heard, and we should talk a little because this is where we can get into hard numbers so you can advise your clients. But I actually did hear a senator yesterday say he completely thinks there should be no salt deduction.
Oh, really?
Yeah, I mean, his argument was assault. This is a good political argument. I'm not saying, and we'll talk about the details of what's being kicked around. But his argument was, why should a low state, he happens to live in a state that doesn't have a state income tax,
Right.
subsidize the tax bills of people who live in high income states? So, in his opinion, you should not have a salt deduction because that's a subsidizing of in his world, inefficient state.
Right.
Now that's not gonna happen. We're gonna have a SALT deduction. It's currently 10,000. I don't think there's a chance in the world it's gonna go to 0.
Yeah,
But
I
the
don't think so either.
the question is, how much higher, if any, will it go? So let's start, Annie, by talking a little bit about what's in the House bill, and then we'll talk about what the Senate is talking about.
Right. So currently, as it states in the House bill, they raised the salt cap to 40,000,
Mhm.
which has never been thrown around. I've heard 40, I've heard 30 a lot. I have not heard zero, so that was
Yeah.
news to me.
Well,
But
that was one senator.
right, right. And so they also tied it to the pass-through entity tax. So that's that whole being able to pass through the state and local deduction through the 199A. So there's some changes that are being tossed around, tying the salt to the pass-through entity tax, which is small business. More small businesses would suffer from it.
Right.
You got both sides. I don't know how far that's going to go. I did hear one senator say to keep it at 10. I heard some compromising around the $30,000 mark. Where it'll land, I don't know. I
Well,
agree. I don't think it's going below 10, and I don't think it's going over 40 either. I think it's going to.
no,
I
no,
think that's our range.
yeah, we're somewhere
Um,
between 10 and 4. And again, this is politics because
right.
in a normal world, if all our only goal was is to not let the Tax Cuts and Jobs Act expire,
Hmm.
we would just pass the same extension of the current bill.
Right.
But this is where you get into politics. In the House, as we all think we know, there's a very small Republican majority. I think they can lose 3 votes or 4 votes or something, but they've got very few people they can live. And in the House, you have a lot of congressmen on the Republican side who are from these high income states.
Of course.
And so their constituents are arguing that a $10,000 salt cap is way too low and it penalizes the people in their district. Conversely, when you go to the Senate, there are no blue state Republican senators. So they're not hearing about it at
Right.
the same level that the House is.
Right.
So the House crafted this $40,000 number
Cap. Yeah.
to get enough Republicans to vote for it in blue states, but not running off enough deficit hawks in the Republican Party who are concerned about the deficit. Because again, that difference in 10 and 40 is considered spending, which the government's already overspending, so it raises our
Right.
deficit. So they struck this balance of 40, and I think there's some incremental 4% increases or something like that. I
That
think,
is in there. That is in there, and
yeah,
like an inflation adjustment each,
right.
year or whatever.
So now it goes to the Senate, which has a different political dynamic.
Mhm.
And um, you have that one senator who thinks it could go to zero. You've got some who think it should be not capped at all. It should go to whatever it is. And the other argument is, and you touched on this earlier, whatever the Senate does, unless they don't change anything, which I don't think has ever happened in the history of bills, is that politicians just take what somebody else did and say, yeah, that's good. We'll just leave it there. But every change or any change that they make requires the bill that the Senate passes to then go back to the House. And so if you dramatically
Right.
change that 40 back to, say, 20, you're back in that argument about, getting votes with that narrow margin. So we're really into a political discussion of, is there a number between 10 and 40 that the Senate can pass with their 53 votes that will keep the one vote? Remember, the House bill passed by one vote. So there's not a lot of leeway there. So if they drop it, what can they do? Now, as we talk about this and some other things, keep in mind this is the signature piece of legislation for President Trump.
Yes.
And it's hard to imagine that the Republicans aren't going to coalesce around something that can pass both House and Senate. But it is very much a political battle right now, more than a lot of the details of what's in it. Though we'll talk in a minute about, some of the new stuff that's clearly coming from the campaign. It wasn't in the TCGA, but
Right.
TCJA, but
Do you think that July 4th is really a reasonable time frame? I mean, that's like 2.5 weeks. I
yeah,
mean, is that, I mean, I know they really wanna to, you know, hit that deadline that they set, but do you think that they're gonna make sacrifice the, I don't know, the conflict just to make that deadline? Do you think that they would give something up just to hit the deadline? Or do you
well,
think they'll stand strong?
first of all, the deadline is, I'll call
Internal.
it ceremonial. The
Okay.
idea that on the July the 4th, we sign an extension of the tax bill, the one, because there's a lot more stuff in it that is defense related, energy related. I mean, it's not just taxes. We're focusing on the tax part, but again, there was this idea that, we can do this on the 4th of July. We're celebrating our birth as a country and we're passing this
Right.
wonderful bill. At the end of the day, if it's July the 10th,
What difference
Is
does
it
it make?
really does it
Yeah.
really matter? Probably the biggest motivator is if it's not passed by July the 4th, a lot of politicians in Washington aren't going on their vacation because I did
Oh,
hear Senator Thune, who was the majority leader of the Republicans in the Senate, saying, if we don't have this bill signed by the 4th of July, we're not going off on 4th of July break, which is a
alright, that's an incentive.
that's an incentive, yeah. So it's I mean, I don't know if it'll pass. I mean, there's a lot to be I think what we're just kinda reading the tea leaves here, I haven't anybody
Yeah.
said this. It sounds like the Senate is getting to the point where they realize they're gonna have to accept more of what the House has done than they might like, just
Mhm.
because they've got a little more leeway and flexibility in the Senate than they do in the House. So I think it'll have to go back to the House, but I would imagine anything the Senate does has been cleared by Speaker Johnson on the House that he thinks he can keep his slim majority on it. But
Right.
when it'll
Okay.
happen, who knows? I mean, the world changes so dramatically. I mean, since we last did a podcast, we got Iran and Israel going at each other. We've
Yeah, I
still
know.
got, you know, and there's so much dynamics that can change things in terms of where our focus is right now. There's a focus on getting this bill done, but
Mhm.
who knows? It could change. So I don't
Yeah.
know. I mean, I think that's their goal. I think right now they're still saying they can meet that goal, but we'll see.
Yeah.
I think, and again, I think can you get it through I think if you can get it through the Senate with minor changes, the House can move pretty quickly, and then it's just a matter of putting it on President Trump's desk or
Formalities.
something. Yeah.
Yeah.
So, but if they
Yeah.
make dramatic changes, I don't know that that's going to work. But
Well, and
we'll
then they
see.
have some new stuff, and so, like, the Tax Cuts and Jobs Act is one part of it, but now we've got, a tip deduction, no tax on tips, no tax on overtime. I've seen there's some enhanced deductions for seniors.
Seniors. Yeah.
I've heard stuff about car loan interest being deducted. I've heard stuff about student loans. It's like, 1099K is back on the table, just, the
The
threshold.
whole 1099, yeah, the whole 1099.
Uh,
Yeah, I think
and
this is
that's
where
been
the
around.
politics have come in, and let's talk a little bit about these because these are things that obviously aren't in the Tax Cut and Jobs Act today.
Correct. These are new.
We heard about them on the campaign trail.
Mhm.
Um, they were very popular politically. In
Yep.
fact, some Democrats even support some of these if they were, isolated and not part of the Tax Cuts and Jobs Act. And he talked about the first one you mentioned because again, there's no real dispute about this. We want to go. Let me kind of step back. We want to kind of go
Sure.
through and talk about what's in the bill, and then we want to kind of reflect back on our conversation with Commissioner Werfel about when a bill like this passes, what does the IRS have to do? What kind of work does that put on their plate when we start looking ahead to budgets and hiring and laws? So let's talk about it first in the context of what does the law say and what might it mean to us as practitioners, but then what it might
Right.
mean to the IRS and their responsibilities so that our lives are not as difficult as they could be. So let's start. So tell them what's in the House bill. Again, haven't heard any arguments about it in the Senate. So what does it
No,
look like?
that's true.
No tax on tips is going to look like.
No tax on basically, you're not getting taxed on it, but what you're getting is actually a deduction for tips that's already, been included in your payroll. Because this one does go back to the beginning of 2025.
Right.
So when you're talking about no tax on tips, you're talking about half the year has already gone by where payroll reporting has been based on Federal Labor Standard Act and our current law. So what this would do is essentially give someone a deduction, above the line deduction for
On their
tips that
tax
were on
return.
right on
Right.
their tax return, and then going forward. But then you still have to identify, so these are tipped income, which would be cash tips essentially earned during an occupation that is customary for having such tips. It would have to be something. Most tips are considered voluntary, so, now you're dealing with, can you automatically charge a tip or does it have to be voluntary? So you think about it, just you go to a restaurant and if you have more than a certain number of people at the table, they put the tip automatically in there. So is that no longer voluntary or is it voluntary?
Mhm.
So you get, and it gets complicated. Same idea with overtime, but this one's going to be kind of interesting because the bill would establish similar idea. get no tax on overtime. So you would essentially get a deduction, same kind of structure as the tip deduction would be, but and overtime would be pay would exclude qualified tips as well. So you've got these two things working together. Now, if you recall what a W two looks like, there is already a box on the W two for tips, but there's not a code or a box or a spot that you would generally put overtime. So if you
Mm.
start thinking, you start thinking about it, the idea is great. The okay, I understand where it's coming from. I know who, how it can benefit, but you've got a lot of things working that need to work together to make it work well.
Yeah, and
And
a
so,
lot of this stuff, seems simple, like when it says, "Well, the tips have to be voluntary." Well, somebody's gotta decide, to your point, is an automatic service charge that I agree to as a customer when I sit there with 6 people at the table, does that make it voluntary? Even though it's compelled? Or if I leave extra, does the extra count, but the other these are all things that legislations don't necessarily. And when in what profession is tipping is customary? Um,
I feel like
some
you
are
get asked
obvious.
for a tip everywhere.
Yeah,
you
some are
know?
obvious, but some are less obvious. Interestingly, this is something that I think is an opportunity for us to talk to some of our clients and make them understand. I was waiting to get my hair cut last weekend, and it was funny because all the hairdressers were talking about no tax on tips,
Mm.
and some of them thought it was already law. So that was the one first interesting thing I heard.
So were you educating the whole hair
No, I
place?
was just listening. I was just listening. I
Good.
don't want to get into a tax discussion with hairdressers, who, again, some thought it had already started. Others expected to see an immediate boost in their paychecks. Well, what they
Oh,
don't understand is because it's an above the line deduction on your tax return, the only way to see your paycheck increase is to go complete the wonderfully
W-4,
simple W-4 form that no one knows how
right.
to figure out, and fill
Mhm.
it out in such a way that they withhold less on your wages so that, you're getting the money in real time. Um,
Right.
I
I c
and,
that's a logical I that's logical to me too. I mean, if you're not familiar with how the payroll system works, if they think, "Oh, I'm not gonna get taxed on my tips," well, you think you get more money every paycheck. I mean,
yeah,
I see
and
the
depe
thought process. I
Oh,
see it.
sure, sure. It's just
Yeah.
interesting when you hear people, and again, you're glad they don't know what you do, so they don't come ask you or join the
Figure
discussion.
it.
But,
Yeah.
I mean, it's going to be something as simple as could the number you mentioned the W two, and there is a box on W twos for tips. Does that mean that we can rely 100% on the number in that box, or would something go in that box that would qualify as a tip on a W two that wouldn't qualify as a tip on the tax return for for
The above the
example, I
line
mean, I
deduction.
don't I'm trying to think of a crazy example where tipping isn't customary. Uh, you go into your doctor's office and you tip the doctor,
Yeah.
and somehow on the doctor's W-2, they actually put the tip on his W-2. Well, it would be in the box, but that's not a business where tipping is customary, so it doesn't qualify. So, in
Now what?
addition to just yeah, so will we be able to rely on the number? I'm assuming most people will. They'll just take the number in that box and they'll say, "There you go." And there's some limits. I mean, it can't be $1,000,000 worth of tips, and there's some other.
Right. There's caps and thresholds associated with it.
But this is where, and we'll touch on it in more detail when we get to overtime, just because it's a better example. But this is where I don't think I don't know how to say this. Politicians recognize what sounds simple in a bill is really complicated when you hand it over to the IRS and say, "All right, you got to come up with the rules, you got to come up with the guidance, you got to come up with the forms, and you got to do all this before filing season next January." Depending on when this bill passes. So this
Mhm.
is where, our concern about the readiness, if you will, of the IRS could be a real problem next filing season.
Yeah.
So, but I think to wrap up tips, this is going to be part. If this bill passes, tips, no tax on tips will be part of it.
Yep, I
Yeah,
see.
yeah, and
I think no tax on overtime for to some limit is
right,
also gonna end up in there. My opinion,
yeah.
but I think it's
Oh,
gonna be in
sure.
there. I think
No,
that one's gonna
well,
be even harder.
This is gonna be much harder because first of
Mhm.
all, I think the way the law is written, it says you can no tax on overtime based on the Fair Labor Standards Act. Now,
Right.
does all businesses use the Fair Labor Standards Act to do overtime? Can you
Well,
have
no, you
union
could have
contracts?
unions, yeah.
Yeah, I mean, so, again, secondly, other than getting to the payroll, let's just say you pay every Friday, the only time I really have to worry about internally keeping up with overtime is week to week or month to month, paycheck to paycheck, I guess is the best way to put it. Once I calculate the pay, I don't store that information anywhere. I just
No.
pay them and withhold taxes, and we move on to the next pay period. Now, payroll systems are going to have to somehow store that information because there will be a box, we've been told, for overtime on the W 2. Doesn't exist today. Don't know what it'll look like. But somewhere as a tax preparer, we're going to have to be able to look at that W 2 and rely on that number on the W 2 to be the uh, overtime wages that are tax free or potentially tax free to our client. So, and we don't really have, I have been told, I don't know this personally, that they tried this in Alabama once it started and it was just a complete disaster and they repealed it. I mean, it just became so difficult and so cumbersome and so hard to enforce and interpret that they just said
Well,
this wasn't working.
the business owner has to have their formality, their records, what do they have to keep? And then the taxpayer, well, what do they get to give to their, the taxpayer, what are they gonna give to their tax practitioner to do on the tax return? And then the IRS has to have the form and the software has to be updated, and then you have to educate people about it.
Right.
It's multi steps there.
And it's going to create another interesting argument, discussion, not sure what the right word is. If you've been
Tension.
involved, yeah, tension,
Tension.
tension, good
There
word.
you go.
If you've been engaged with small business owners in the past, you've known that they wanted to throw everybody into a salaried position to get around paying overtime. In other
Right.
words, and so finally they've had to come up with guidance about how many people do you manage and what's your roles and all these different sorts of things, so that you could exempt yourself from paying overtime. And now you're going to create a real reason that people are not going to want to be exempt
DSO.
and be on a salary. So you're
Right.
going to exacerbate that tension between the employer and the employee to some extent. The other, and I'm going to flip back a minute because I just thought about it with tips. What's
Oh,
going to be really interesting is for years, I think we've all known that tipped people were getting a break already because
yeah, under the table, right? That
yeah,
kind of break?
there is no way in the world that they were reporting all of their tips unless they were all on a credit card or some way
Right.
of being tracked by the business. So it's going to be interesting now to get a true sense of what tips might really be because now they're tax free,
Yeah.
except this part of the law is only good for 4 years.
I did see that 2025 through 2028. That's it.
So let's say that for the next 4 years, all the tipped employees in the country are reporting 100% of what they get because it's tax free and this expires in 4 years. Eh, What is the
It
IRS or anybody going to track the fact that all of a sudden tips went up when they became tax free and they declined significantly when they were taxed again? And um,
You're right.
going to
There's
create an
great incentive to do one way or the other depending on what year it's in.
right. And the
So,
reason it's only 4 years goes back to the discussion we started about how much does a bill cost? What's the deficit? If you put something permanent, which a lot of what they're trying to do with the Tax Cuts and Jobs Act is the reason it was scheduled to sunset this year was because that restricted the how it was scored because it expired.
mhm,
So now they're trying to make it permanent. That's where some of the argument about spending comes from. By putting tips and overtime tax free, they accomplished two things. It got it through the Trump term and ended it so that the bill it doesn't cost as much. And
mhm.
then theoretically 4 years from now, if you don't extend it, it goes away. But you'll
Right.
learn a lot of interesting information about really what tips are. So, but again, and we'll go back to the overtime in a minute and talk about just think about all that we've touched on some of it. I want to go all the way through everything that has to be done from the IRS perspective to do that. But there's another one in there you talked about. It. We also heard in the campaign, no tax on Social Security. Well, we didn't quite get that far. So
But
what
they
did
did
we get?
they it's called enhanced deduction for seniors. Basically, it's like a bonus deduction, so to say, age 65. Ages 65 and over, you would get another $4,000 with your standard deduction. That's also adjusted for inflation. But essentially, what it's doing is it's giving our seniors a more of a deduction rather than less tax on their Social Security benefits.
Yeah. I think when the math got factored in as to what it would cost to completely exempt Social Security from tax, they couldn't afford it.
And I do see there's support on both sides for this, is my understanding.
Mhm.
I don't know if the number is the right number, but there is both Republicans and Democrats in favor of enhanced deductions for seniors.
Yeah, and remember, prior to the Clinton administration, Social Security benefits were not taxed. That was a fundraiser or a revenue raiser,
Razor,
in the Clinton tax year. Many states still don't tax Social
that's true.
Security.
That is one of the state adjustments on a lot of state
Yeah.
returns from the
So
federal.
this one is very popular. Just I think we can't. I personally, selfishly, based on my age, would have preferred that we went back to the pre-Clinton things and because this is basically income that you've already paid tax on
Yeah.
when you paid the Social Security taxes. That we would have done more here and less in the other two. But hey, there's not as many of us old folks voting, evidently, as there are people
Well,
getting overtime and
yeah.
tips.
Yeah.
So talk about the car deduction. So that's
This
again
one's
another.
interesting. I see the incentive here. Again, it's just that same 2025 through 2028, but it would allow a deduction up to $10,000 for interest payments on your cars, auto loans. But those would have to be final assembly would have to be in the US, and final assembly is something I'm not going to define, but you get where they're going with this. They're promoting buying your cars in the US versus abroad. And I do think this one both has some support on both sides.
Yeah.
So I don't know.
It kinda reminds me a little bit of what we had with the electric vehicle credits where
Hmm.
was the battery made and, all this sort
Yeah.
of stuff, where there's gonna be a lot of fine details that it's not gonna be as simple as this, that, "Oh,
No.
it's a Chevrolet, so it must automatically count." Well, when you find out the car was built in Mexico or something, and now it's gonna be a question we're gonna have to ask when we go buy a car, does it
Yep.
qualify for this
The
deduction?
dealerships are gonna have to have this some sort of paperwork and something to give you to know if you get it or you don't get it. And so again, there'll be some administrative things that need to come into play for
What
this
if
one.
you
A big,
lease? Do
yeah,
you get any
didn't
break
address
if you lease?
leasing.
Yeah, so
I
is
didn't
there
see that.
anything you could impute interest on leases? Again, and this is kind of a lead into our next topic, and I think overtime's a good place. Again, I keep referring back to our podcast with Commissioner Werfel, and we're gonna talk about how this filing season went, because I think you and I would both agree this past filing season was actually pretty good.
Yeah, I
Um,
think a lot of people agree. I've
yeah,
seen AICPA, NAEA, everybody's, writing about the successes of this past filing season.
but if you take something like the no tax on overtime and think about everything that has to be done and when it has to start, and you hand that over to a reduced workforce who's I thought one of the best analogies that Commissioner Werfel gave on our last podcast, if you haven't listened to it, I encourage you to go back, was talking about the situation where if a football team is going to play in a new stadium, it takes a while to build the new stadium. So you have to make sure the old stadium is functional until the new stadium is ready. So if you want to make all these dramatic changes to the IRS to improve its technology, to have better people working there and be more efficient, and do all those sorts of things, you don't just wake up one day and you've gone from position A to position B. You've got to work through the transition. And this tax bill is going to put a lot of added effort and
A
work
lot.
on the IRS before they're necessarily better than I think we all hope they are. Because, and let's just, I think we may have covered all this, but overtimes is going to, first of all, take guidance to be written on how to calculate it, how to report it to the employee, what records the business owner has to keep to back it up. Then the IRS has got to come up with a line or a form or whatever to put it on, instructions, and answer all these crazy questions about what if I work in a union thing? What if it's not stated? What if somebody just hires me for
Yep.
uh,
FAQs, or
FAQs? All of this that
then the software companies have to get it into their software so that it's
exactly.
calculated. The states have to decide what they're going to do about it because now it's affecting the federal AGI, which most states bounce off of. So you've got the states now coming in. um, and have to figure that out too.
Yeah, you just made a great point that I hadn't really thought about. A lot of states try to piggyback off the federal government as
Right.
much as they can, but now we're gonna see some dramatic changes. So does that mean every state is gonna accept no tax on overtime, no tax on tips, deductible?
They
Are
don't
they
have
gonna
to. It's
No, they don't have
they
to.
don't
And
have
sometimes
to
depending on when their legislature meets, they couldn't do it because their legislature doesn't meet in time to update it to
implement.
follow the federal rules. So it could
Yeah.
completely complicate state reporting.
Mhm.
Again, you know, there's and it's impossible to think of all the questions. But if I'm paid $500 a week salary but work 80 hours, but you don't call it overtime, do I get a
Make
deduction?
it worse. Make it worse. You work in a restaurant, so
Yeah,
now you got tips too.
tips and overtime. So
Right.
I mean, how do you reconcile all these scenarios that are out there? That's what the IRS should be working on today, in addition to.
Yesterday, I don't even know if today is good enough. I
Yeah,
mean,
well, I don't think they know who's working
whew.
there today yet, and
Oh,
then
that's
we'll
true.
talk about they've got some leadership finally worked out. So, I mean, it's just I'm afraid that this next tax season could certainly be depending on this goes back to when does this bill become law? The sooner the better, so the IRS can get working on it. Now, they've
Mhm.
handled these things before, but we can all remember there's been times that we couldn't file tax returns until later in the
We've had
filing
delayed
season
yep, we've had
because the
delayed
forms weren't ready.
yep, delayed tax season. The start
Yeah,
of tax season has been delayed due to yes, I remember.
yeah.
And
So,
all those people who want their refunds are not happy about that.
no.
So,
So it could be worse. I mean, so this
mhm,
upcoming tax season has the potential to be a mess. And as the longer it takes to get to the final bill and the more things that are new, the more difficult. Just extending the Tax Cuts and Jobs Act shouldn't be a problem. That's already programmed. It's just boom. But
yeah,
but but things like
then
this add complexity. So
and we've
who
only
knows?
touched on a few. I mean, there's all
Yeah.
kinds of clean
Oh yeah.
energy things and stuff that we haven't even touched on.
Right.
R&D and depreciation changes and all the kind of the normal stuff, but this just adds magnitude to the amount of work that needs to be done. And I'm sure all of our listeners here have heard about, the decrease in workforce at the IRS, the brain drain, those types of things. It's
Hmm.
going to be put a lot of pressure on the IRS to make this work by tax season.
To
You're
get
right.
so we have a normal and we haven't even touched on the fact that, the 199A deduction
Right?
is changing.
Yep.
Um, you mentioned earlier the difference in the SALT from the entity level, to the
Mhm.
individual level. Like you said, there's some big things and there's a lot of little things tucked in that could potentially take more time on the IRS to figure out than the more important things. So,
Mhm.
um,
And then you throw in the the budget, and then they're gonna cut the
yeah.
the IRS budget,
They're gonna
so
cut the work we'll talk about that in a minute.
oh,
We're gonna cut the
man.
workforce even more. So I guess what we're saying is I hope you enjoyed the 2025 filing season because it was a good season. I don't
Fairly
know that
smooth.
we'll have the same comments this time next year. But Andy, talk about some of the stats about because I do think the 25 filing season was successful and it was not because of lack of volume and work. So talk a little bit about
Yeah.
some information that we got on how the IRS did with
It's sort of like
this
a
past
recap of the season. So, the agency helped 62.2 million occasions, help taxpayers, and that was up 3.2%. So, I mean, not a huge
still
increase,
but
but
still more. Yeah.
it's still more. The toll-free customer service lines, that was up. They helped more customers in a faster time, up 11%. I'll take that. The taxpayer assistance centers, which are on the chopping block at the moment, but last season they helped over 26% more taxpayers. So again, we're seeing this trend of being able to assist more taxpayers in a faster time, whether it be in person or on the phone. They've got revenue was up, exceeded 5 trillion this year, which is almost a 9% increase from the previous year. So again, collections were better this year.
Mhm.
They processed 266 million returns. That's individuals and business and tax exempt, which, and issued close to 553 billion in revenue. Think of all that money that just went back out into the public to be
Mhm.
churned and spent. That's amazing. And with the current staff that they had this past tax season, they did over 500,000 tax return audits, which resulted in 29 billion additional tax or revenue generated. So if you're looking at those stats, and this is just a few, I mean, if you look at how many people went on and used the online tools or the portals or some of the resources available on the website, all of those are up, 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 up from years, multiple digits, over 10% in almost every category of resources that the IRS has spent time and energy and money on that the taxpayers or tax practitioners have taken advantage of to make their tax season easier, help the IRS get through some of the backlog. Yeah, like I said, I've been reading Accounting Today and AICPA and NAA. All of them are really, you know, giving a thumbs up and a hand clap and all the stuff to the IRS. And I do too. I found this tax season to be much smoother than clearly the ones during the pandemic, but we've had some struggles in previous years with delayed forms and that K2, K3 year was a tough one. So I saw improvements, and I'll take it because I think next year is going to be rough, really
Yeah.
rough.
And a couple of these kinda jumped out at me and kinda reflecting back on what we said earlier. The first one was the fact that for the first time ever, over $5 trillion was collected, a 9% increase.
Yep.
So the agency that collects all the money to be spent collected 9% more this year than the year before, but our budget deficit and our debt went up.
Hmm.
So we have an increase in the money that we get each year. We're just spending it faster than the revenue is coming in.
Yeah.
Had we let's say we had if our spending had only increased by 4%, we would have had a 5% difference. So that number jumped out at me because a lot of people think that we're not collecting 9% more this year than the year before, and yet we still went backwards in,
And our audits generated additional funds too.
right. So, I mean, do we really have a collection problem? But we need an
We
IRS.
might.
Yeah, we might. The other thing that was interesting was that refund number, because for most taxpayers, the only interaction they have with the IRS on an annual basis is getting a refund check.
Yep.
And the IRS has issued, what do we say, $553 billion in refunds. And I think for the most part, they did it within their 21-day
Yeah,
much
they said
actually,
between 2 weeks and to 21 days. So
yeah,
that's processing and generating checks and getting it out to people really quickly. And there's more e-filing, more direct deposit, like all of those kind of proactive, let's get this, wheel churning, let's get the money out, let's get it done. All of those numbers went up and they go up every year. Direct
right.
deposit and e-file go up every year.
So if you summarize these stats, and then we'll come in with some new ones, got more work. The IRS had more work this year than in the past, but they
Hmm.
collected more money than in the past and got out refunds in a timely manner. For
Yep.
most people, that's a good year. Now,
Yeah.
those are the good stats. Annie, what about the future proposed budget for the IRS that has been put out there and how that might impact next filing season and filing seasons to come?
So again, this is proposed. I just want to remind everybody of that.
Right.
But it's outlined in what's called the annual congressional budget justification. Fancy terms for this is how much money you're going to get. This is how much money we're allotting to you. And currently, where this proposed budget stands, is that there would be a budget reduction of 37% from the previous year. Big number, 37% is huge.
Big number.
Um, the fiscal year 2026 proposed budget is 14.2 billion, and that is down from 22.5. So you're looking at like 9 billion. It's going to completely reduce, funding that was previously slated through the IRA, which is the Inflation Reduction Act. And so a lot of it's being pulled back or rescinded, so to say. Uh, the shrinkage at the IRS workforce, 20%. 20% is about 78,000 employees. That will be the lowest since before COVID. and that is a big decrease, a concern for many agencies, including tax practitioners and taxpayer services. And so it is there is a inevitably there will be taxpayers are going to have a harder time getting through the phone service or receiving answers to questions. There's a lot of those service centers, in-person service centers, that have either already been chopped off or could potentially be on the chopping block. So we're probably gonna see higher wait times, longer processing times, harder to get your, notices or questions answered from the IRS. They do have some of the online services that, over, I guess, like the last 2 to 3 years, have really improved. Some of that stuff is being pulled back, not all of it. Some of it is. So we'll see, a struggle there to get copies of records, and even the direct file, the IRS direct file, looks like it's going to be gone. Um,
Yeah,
so
they've pretty well taken
changes,
with yeah.
yeah, changes are coming. I think what they've taken away is not under consideration for being put back, but I don't know. I guess.
Well, and I wanna go back and say something Annie and I have said before. It may very well be that these numbers of employees and budgets are what the IRS should be able to function with.
Oh, sure. I have no idea
I
what
I
the.
just I have no idea, but
Yeah.
it's a big drop from point A to point B when all we're doing is dropping. I don't know that we've thought through it enough, and can we get all there in 1 year, or do we need to gradually work towards it versus just saying, "Well, we gotta get rid of all these employees," and I agree their computer system needs to be upgraded. Well,
Oh,
that's easy to
sure.
say, but it's hard to just drop it in one day.
And
So,
fund it, right?
yeah, I'm not smart enough to know if these numbers are better or right or reasonable. I'm just concerned that if we move too quickly, and again, just personally knowing a lot of the people who have left the service, you just don't replace those people overnight. It takes a
Yeah.
while to get into a situation and learn it and understand it to be as efficient and as effective, no matter what you think. I mean, there was inefficiencies and ineffectiveness at the IRS. I'm not sitting there
Oh, sure.
saying they were the
Any
best.
any agency, any
Yeah.
agency is going to have, some fat that can be trimmed, some procedures that could be changed. But I'm with you. It seems like we're taking away, taking away, taking away, but then adding more work. And so I
Yeah.
just don't know how that, where the sweet spot is. And we may not know the sweet spot. It may take several years to figure out, what is the right size of the IRS, or how much funding do they need, and um,
It may take one bad tax season to actually make the point that it's an agency that's easy to be critical of.
mm,
We
yeah,
we're I can't think of anybody in our profession that hasn't criticized the IRS many times in their career.
yeah,
And a lot of those criticisms were warranted and, justified. I'm concerned that we run the risk. Again, you throw all these reductions in force and money and technology on top of changing in tax law and all the other things. And, I just have this fear we've got one bad tax season ahead of us, and then everybody will say, well, that didn't work. We got to go do something different. And,
yeah.
it may take a while to get through. So I think I would prepare my clients for this. Again, we'll see. The IRS has always said that, they react when they have to do something, they find a way to get it done. So I hope they're right in this case, but it's just,
Hmm.
I know how the attitudes of the people there, the nervous. Oh, we're still not through. I mean, you talked about all those layoffs. Well, they don't all know who it's going to be yet. And
I was just about to ask you, how was the tension when you were in DC last time, 2 or 3 trips ago? You were like, these people don't know if they're coming to work tomorrow.
yeah,
you know,
no, they didn't, and some of them still don't.
yeah,
Because they're still working through who took the voluntary retirements, and if that doesn't work, who's going to be let go. And we've got some departments that lost 70% of their workforce, some that lost less. So
yeah,
how do you make up? I know one of the things that I don't remember what venue it came up on, but the stakeholder liaison group is a group that is really important to the practitioner community. We have these local stakeholder liaisons that are the kind of the liaison between the IRS and DC and the practitioner down on the street. And that has been cut by half or more. And you're not going to have that one-on-one. relationship with the IRS that you were used to for all these years, you're going to find most of that. If you're not part of an association of some sort or organization, you better become part of one, because they're almost being forced to communicate through those organizations and rely on the organizations to communicate down to the individual practitioner, just because most of the people were let go. And so it's going to be a transition. And they'll probably do better than I'm expecting, but I
I'll take
hate that
that.
it yeah, we'll see. Now, one thing that has changed since last time we were here, and I hate keep mentioning this, but I think one of the things that Commissioner Werfel said on our last podcast was he thought permanent leadership at the IRS would help.
Mhm.
And Annie, I think we now have permanent leadership.
We do, as of June 12th, so about a week ago or so, the Senate did confirm Billy Long as the IRS commissioner. It was a vote of 53 to 44. So he will remain the commissioner unless something changes. He will remain the commissioner until November of 2027. So that's the expiration of his term. Correct me if I'm wrong, but I believe that he is the sixth commissioner this year who's held this spot. Is that right? 6?
That's close. I'm trying to think of
So
when
there
did Werfel resign, and then we went to a lot of temporaries and
temporaries.
actings, I guess, is the acting
Yeah,
commissioners is the term. It's the 5th
and
or 6th in a
yeah,
very short period of
one of
time.
them, like, only lasted a day.
Yeah, yeah.
Somebody was in and out in a day. So, anyway, yeah, I agree. You might like him, you might not like him. If you saw any of the hearings, there are definitely some issues that were brought up, but we do have someone who is now the commissioner, and permanent leadership, like you said, is going to be crucial to implement all the new stuff coming down the pipeline.
Yeah, we'll have permanent leadership. Now, interestingly, he's only serving out the remaining part of Commissioner Werfel's term. He doesn't get the
Right.
traditional 5-year term of a new commissioner. So theoretically, we would be going through this nomination and approval process again in a couple of years. Whether they would bring him back or
Yeah, bring
start
him back.
over, and now we're going to be overlapping administrations. I don't know. But we do have a
Yeah.
commissioner. I think it's going to be interesting to see who he surrounds himself with in terms of advisors, because he does not have a big history of working in the tax system.
Right.
And so a lot of people have said, as a person, he is very friendly and someone that people like. There's some concern about his background and knowledge of the tax system, and I think that's why who he surrounds himself with will
Mhm.
be critical to see where he's getting his advice from. Um, it's going to be interesting. It's going to be interesting, but now we at least have permanent leadership, and we do have a commissioner, and that process is now behind us. The
Mhm.
interesting, you mentioned it was 53-44. That was exactly down party lines. Not a single Democrat voted for him, and
Uh-huh.
not a single Republican voted against him. And if you took any time to watch the hearing, you kind of knew that's the
How it was
direction it
playing
was
out.
it was
Yeah.
going to go.
Yeah.
Um, so we're heading into what normally would be a quiet summer for all of us, but we have a lot to keep our eye on. And
Mhm.
from a tax bill to the tax administration agency now under new leadership and changing dramatically. So get your rest before next tax filing season, because I think we'll be fine through the extension period, because
Yeah.
we're still dealing with the old system, if you will, the current year system. But none of this stuff's going to hit until next filing season. And but I do think we prepare people to say, phone calls aren't going to get answered as quickly. It's not going to be maybe. I think the IRS can probably process the returns properly, but if you have a problem, I'm afraid it's going to take longer to
Mhm.
resolve it.
I
And who
agree.
knows what it's going to do to compliance and audits.
Yeah, that's true. Less workers, are we gonna see non-filers, more non-filers this year? I don't know.
Yeah, we'll particularly people in the business community take advantage of the diminishing resources and be a little more willing to gamble on what they do and deduct and don't report and do report and things such as that.
Yeah, 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 yeah.
The individual taxpayers probably stuck because all their information is already in the IRS computer. It doesn't take people to
Mhm.
run them down, but the business community, the sole proprietors, the people. we're raising the 1099. You mentioned the 1099K or
Okay.
1099 period number goes from 600 to what? I think it's 25
20,000.
for 1099K, but I think it went up to
Oh,
2,000 just for the regular self-employed person.
1099s.
Yeah. So there you go. There's less now in the system. So there's
Yeah,
more
yeah,
relying on. So it's going to be an interesting summer and fall and interesting tax season. And still got to watch the tax bill. Don't know where it's going to land. Pretty sure we'll get something. Republicans are not going to let the taxes go up on the whole voting
right,
country before an election. That's just not going to happen.
right.
What it looks like and what else is there, we'll see. Um, Interesting time.
Yeah, and we'll keep you up to date on what's happening, and if it's just us or we have another speaker come in or a guest speaker, we'll keep you in
We
the
do
loop.
have a guest speaker lined up that we're trying to hold off on. He's actually works for the firm that follows all the tax stuff in DC for us and NAEA for that matter. But we're trying to wait till we have more certainty, so we'll have a better sense of what the final rules look like. But we'll probably bring him on sometime in July and August
Yeah,
to give us some final. Because right now you're getting Annie and I's. I will be kind to us and say educated opinions,
there you go.
but they
Yeah,
are opinions. But when we have Thad on, who he's been on before, if you uh, have heard him before, we'll be talking, exacts then.
yeah, yeah.
Anything else?
Nope, that was a lot of information for a random podcast in the middle of the summer, but like I said, we'll be bringing anything new to you as soon as we know it.
Yeah, we made it through without a guest, Annie. We're
There you
back
go.
in the
I
swing
know.
again, so we'll have to
Yeah.
try it again next time.
Yep.
All right, Annie, thank you for help put all this together. Thank you as always for listening to this podcast. We hope you'll recommend us to your friends and join us in a couple of weeks for another Federal Tax Update podcast, and we'll be talking about whatever's on the minds of Annie and I and the tax practitioner community in the next few weeks. So thank you for listening,
Thank
and we
you.
will see you soon.